want to welcome everyone. I want to say good evening. And for those of you joining me on Facebook Live, I want to say thank you for joining me. So we started this series 5 weeks ago on why life insurance is a benefit to the assured. We started with term assurance. We saw what term assurance is. We went to talk about whole life assurance. We talked about endowment assurance. And last week we talked about annuity. And that last week we discovered why, if you have not been the type that has been into business, if you have been an employee for most part of your years, the onus is on you to not just look at, oh, you've got your severance benefit or your retirement benefit, and just went to put everything on the business you are not familiar with. We said that annuity is an option because it gives you a steady income. So today, it's already 5:30. So today we'll be looking at the fifth, I'm still on the series of why life insurance is a benefit to the assured. So today we'll be talking about group life insurance. Group life insurance, apart from the fact that it is very, very beneficial to the assured, in this scenario, the assured is the employer of labor, the employer, the owners of business that pick it up. Apart from the fact that it's beneficiary, it is also statutory. How do I mean by it is statutory? Pension Reform Act 2004 made it a law, made it a compulsory for every employer of labor. If you have employee, at least minimum of 5 employees, by law, under statutes, you are entitled to pick up a group life insurance for your employee. So apart from the fact that today we'll be looking at the benefits, quite all right, but I'm laying this foundation for us to know that it's, if an employer of labor is not picking up group life insurance for his employee, the employer is not doing the right thing. So group life insurance is a statutory life insurance that every employer of labor should have for their employee. So today we'll be talking about group life insurance, and let's look at the features. The features, I hope you can all see my slide on my screen. The features of the cover, that is the features of group life insurance. Now, it is an annual contract. Why is it an annual contract?
Madam, I'm trying to get that clearly. Is it good life? You meant good life?
Group life, group life insurance. Can you hear it now?
All right, continue.
Yes, it's group life insurance. It is statutory. It is under Pension Reform Act 2004 says that every employer of labor, if you have minimum of five employees, you have to pick group life insurance for your members of staff. So we want to look at the features of the group life. That is, it's an annual contract. One of the reasons why it is an annual contract is because the employee, employee can change job anytime. So like if this year, maybe this particular employer is in your company, and maybe by next year is not there, so you will not keep repeating those who have left the organization. So it is an annual contract. At renewal, you pick up group life insurance for those that are currently under your employment. So group life insurance is an annual contract, and the cover is meant only for the members of the group. How do I mean? It is not only group life. You pick group life as club, as organization, maybe social clubs. If you are a member of social clubs, if you belong to a group of people, that's why it's called group life. Fine, it's the employer speaking for their employee. Also, if you are in a group, if you belong to maybe social club, you can arrange group life insurance for the members of your group. So it is meant only for people in a group. Then the employers, when in the course of, if it is the employment, then it is the employer that pays the premium. The employers pay the premium for group life. Then the group must be in existence. It's not that, because every member of the group will have to get their details. So the group must be in existence, because in insurance, the risk that you want to cover must be in existence. So in this case, the group must be in existence. At least there must be a member of the group before there must be a group. Then you can, before you now say, okay, you want to pick up the group life insurance for the member of the group. Now, in the case of employees, the current annual emolument is used to calculate the premium. That is telling us how the premium are calculated. That is, if, let's say, maybe an employee is earning 1 million naira per annum. If 1 million naira, for example, I'm citing an example. If you are earning 1 million naira per annum, then the sum assured for that particular employee will not be 3 million, because that is the status. That is what the law says, that at least the minimum, the sum assured must be 3 times the annual emolument. So if an employee is earning 3 million naira per annum, so the sum assured for that person in that under that group life insurance will be 3 million naira. So what that means is that if in case that person is no more, 3 million naira will be paid to the family. So that's the features of the group life. So we pay the sum assured is usually at least three times the annual emolument. So those are the features of the group life insurance. Now let's look at the benefits. The benefits of this group life to the employees. The policy provides financial support to the family of the employees. Just like we all know that when you pick up group life, when you pick up life insurance generally, is to cater, in case you are not there again, the family takes support from the financial provision that life insurance provides. So also in the group life insurance, when the employer picks up group life insurance on behalf of his employee, what that means is that in case that employee is no more, the family takes financial support. The group life provide financial support, financial backup to the family of the deceased employee. Now it provides a level of peace of mind to the employees that their family will be catered for by the organization in case of eventuality. That is, the employees, if an employee knows that the organization is working with, there is a group life insurance in place, it gives them that peace of mind that at least if they are no more, the family will have something to fall back on. And it motivates the employees to be loyal to the organization. It's a form of motivation. Apart from the fact that it's statutory, it's also an incentive, a form of incentive to the employee of organizations. If you know that the organization, the organization where you are working, if you know that if you are no more, your family will not be stranded financially, and it will boost your morale, it will boost your loyalty, it will boost your confidence in that organization. It will give you that sense of belonging, that, oh, this organization, at least they are thinking of me. I hope we can all relate to that. So it motivates the employee. It motivates the employee. It earns the employee's loyalty. So those are some of the benefits of the group life insurance to the employee. Now let's look at the employer. Our topic is that the benefits to the assured. No, in this case, it is the employer that is the assured because he will pick it on behalf of the employees. Now, what is the benefit of group life insurance to the employers? Now, it is cost effective to the employer to pay premium instead of paying 3 times annual emolument, to the family of when your member of staff is no more. No, for you to not dip your hand into the family, into the company's purse and bring out 3 times annual salary. You know the annual salary is not even paid once, you pay it monthly. So now, if an employee is no more, for the organization to now just look at to dip their hand into the capital and take out times 3 of the annual salary, it will be huge. It is huge. So it's better to pay the premium because the premium it comes very small. So it pays the employer to pay the premium than to pay the benefits. So that is why, because we said it is statutory. The Pension Reform Act makes it compulsory. So even if the family of the deceased employee, if they know their rights, if the family knows their rights, they will call for at least times 3 of their loved ones in the organization is working from. So if supposing that company does not have a group life, it will be under obligation. The organization will be obliged to pay times 3 of the annual salary, which will be huge. So it's better to pay the premium than to pay the benefits to the family of the deceased employee. I hope you can all relate with that. Now, it provides accolades to the organization when death benefit is paid on behalf of the organization. If the organization have group life in place, and death is not what anybody prays for, but it happens. Life happens, it's a reality. So if, as an organization, if you lose a member of staff, and before you know it, your insurer, you notify your insurer, and your insurer pays the benefits, because normally it's always passed through the organization. Most times the family does not even know that it's the insurance that pays it. They will just thought it is the organization that was magnanimous enough to pay it. So it puts that organization in a good book, in the good book of the family of the deceased and even the people around them, that this organization is a very good organization, it's a very good place to work with, simply because that organization has done the needful by putting life insurance, group life insurance in place. So it makes it easier for the employer to gain the employee's loyalty. When the employee knows that this company has group life, it's always, if you look at it as you have death benefits, maybe as a middle manager or as a senior manager, you have a death. Please, let's mute our mic. Imagine you look at your death benefits, and you are aware that. Thank you for joining. So please, let's mute our mic so that I will not disturb others. So imagine if you look at the group life cover on yourself, and maybe you have like 30 million death benefits. You'll be happy. Such person will be happy to know that in case he's no more, the organization, he knows that the organization has made provision for his family. So it gives the employer, the employee, you gain employees' loyalty when an organization puts group life in place for the employee. So it also promotes the compliance rating of that organization, because when I was starting this presentation, I said it is statutory. I said group life is statutory because Pension Reform Act 2004 makes it a compulsory life insurance. And if the organization is good, it means they are in compliance with the law of the land. So it promotes the compliance rating of the organization. I hope we can all relate with that. Now let's look at the underwriting factors or underwriting consideration. If you are picking up a group life insurance, you look at the age of the members. No, age in life insurance, age is always a factor. Age is a factor, is an underwriting factor. You look at the designation. How do I mean by designation?
Bring, and they go.
How do I mean by designation? You know, I mean the sum assured that you
They never come.
Sorry, who is that? Please, let's mute our mic, please.
You collect it from
So you look at the designation. I mean,
maybe collect it for now.
Your ranking in the organization. I mean, what the group life cover you will give to maybe the general manager, of course, will be different from what we give to the clerical assistants and
so
all
make
that.
They go here, make the pack, collect the.
Sorry, please let's mute our mic, please. Thanks for joining me, but kindly mute your mic. Thank you. Now, then the salary, as in the emolument, is also an underwriting factor. It determines what the sum assured will be. I mean, somebody who is earning 1 million naira per annum, the sum assured or the death benefit of that person will be different from somebody who is earning 3 million naira per annum. So all these are underwriting factors when it comes to life insurance or when it comes to group life insurance. Then the nature of the occupation is also an underwriting factor. We look at what is the nature of the job, the organization. Is it a construction company? Is it an investment company? No, it depends on the nature of the job or the occupation or what the organization is into. So all these are underwriting considerations. Then the number of the group. No, the larger the group, when the group is large, it attracts the discount. So the number of the group is also an underwriting factor. So today we've been able to talk about the benefits. Now I started the series of why life insurance is a benefit to the assured, and today I've been able to talk about the 5th series of the topic, and which is group life insurance. So I've been able to discuss group life insurance to us this evening. Because of our time, it's just 30 minutes interactive session with Grace Ujo. So I want to leave out time now for us to ask our question. I'll be glad to attend to your question right now. Thank you for listening. So I welcome your questions, please. It's question time. Because of our time, I'm watching time. I always want to leave enough time for questions. Please, let's ask our question. I welcome question in the room. Okay, Mr. Peter, can you unmute your mic and ask your question, sir? Thank you, sir.
Okay, thank you very much, madam, for the wonderful presentation once again.
Thank you, sir.
Okay, my question. Good evening, everyone.
Good evening, sir.
Okay, so the question I want to ask today is in the determination of the premium to be paid by the employer, most especially since it is legally compulsory that every employer must have a group life in addition to what they pay for pension, to what they pay to PFA regarding the pension of the employee. So how do you determine the premium that will be paid to the insurer? Is it going to be based on what the employee wants, or there is a statutory amount that should be paid? I want to be clear on
that. Sir, your network was fluctuating. You said, if I hear you correctly, you said, how do we determine the premium, right? And you talked about PFA. This group
Yes.
life insurance is different from the pension fund administrators.
No. I'm not saying what you are saying to PFA. I'm saying
Okay.
that how do you determine the premium that will be paid to the insurer? Since it
Okay.
is legally compulsory that after making payment to the PFAs, I said, how do you determine the premium that
How
will
do we
be paid?
determine? How do we determine the premium? Okay, just like I said, I put down some underwriting considerations. Those are factors. Those also aid us in determining the premium. Now, we look at the age of the member, the designation, the salary, the nature of the occupation, and number in the group. But precisely when all these things are provided, then the life office they actually work it out. We use all this information to determine the mostly there's a way it is calculated, but I don't want to bore us with the calculation. But basically, these are what determines the premium. When normally, before you effect a group life insurance or for any organization, all this information will be provided. Then based on this information, then the life office knows that, oh, if the salary is 1 million, they know that the sum assured will be 3 million. Then we will now use there will be calculation. So that is how it is determined. So that's why I put in the underwriting considerations, that age and all this, that they determine the premium. We always say it's per mil, but I don't want to bore us with their calculations. It's involves some calculation, but we use all this to come out with the premium. But it's not like motor insurance that we just say, oh, it's 4%. No, we don't use that percentage to determine the premium of group life. We use mil, we use per mil, but you may not understand, but that is how it is used. I believe I hope I've been able to answer your question, sir. Have I been able to? Okay, thank you, sir.
Yeah,
can I help him further?
Okay,
please.
Okay, go ahead.
Yes, number one, it is important to understand that the way federal government has structured the pension thing is to position the pension annuity, the pension itself, you can understand, in the pension market, so creating a sector for it completely. And the adjunct of it, which is part of the bill, you can understand, is the life assurance aspect of it. That life assurance aspect of it is located within the insurance industry. And they are subject of our normal underwriting considerations, which the lecturer had actually touched upon. The only thing I want to add is that the premium is determined via a table of mortality rate.
Actuarial table.
And these mortality rates are determined by actuaries. These are people that are specially trained in that field. For instance, somebody of age 17 is presumed to have a better risk than somebody with, of age 70 and above. As a matter of fact, when an age is even above 70, it is no longer insurable. But between 50 and 60, you are presenting a higher level of risk. So naturally, you can understand you are supposed to pay more. And if you have a habit, some habit that predisposes you to early death, like smoking, you can understand it's going to give you a much higher premium. And also, if you have some pre-existing conditions, you can understand, like if you have diabetes, and diabetes on its own, you can live with it for about 30 years. But if you don't take care of it, it can kill you in 1 year. it will develop into something like that. So if in your questionnaire, because by the time, whether it is group life or individual life, yes, the insurance company may waive medical examination, but they are not going to waive you from filling a questionnaire which brings out information about you, your family history. You can understand in terms of health, disposition. All these things are going to be combined together to determine, you can understand what kind of rate you are going to, to be fixed with under the mortality rate. And equally, occupation that you follow is equally distinguished whether you are going to pay something lower or something higher. Anybody that works in asbestos-related industry is presumed to be presenting a higher risk, and as such will be rated higher than somebody that is working, you can understand, in a bookshop or in an office and things like that. I think those are little things that I need to share with my friend. Thank you.
Thank you.
Okay.
I believe that's answered the question in detail. I want to appreciate you, Alhaji Dr. Ogunwolu. Thank you, sir. I really appreciate you. My senior colleague in the industry, I really appreciate you for that contribution, sir. Do I have another person who wants to ask question?
Yes, I have another question.
Okay, sir.
The next question is this, that let's assume I've been paying an insurance company for the past 15 years. And this year, since you said it's an annual contract, which I agree, so I've been paying for the past 15 years and nothing happened. But incidentally, there is a death of an employee, and but we are unable to pay for that year. The rule of no premium, no cover. Will it still cover that? Will it still be applicable in that instance?
Alhaji, please answer the question, sir. I give you the floor, sir.
No. You see, under life assurance, we have 3 different types of products. We have one that we call term assurance. That says, you take for a specific term, you pay your premium. If anything happens within that time that causes death, you are going to be paid. If nothing happens, you are not going to be paid, just like your car insurance. Are you with me? And if anything happens, whatever sum that you both have agreed to pay in the event of death will be paid. We have another one we call endowment. Endowment in simple terms is savings. But the types of element of, you can understand, an element of life assurance embedded in it. In other words, it says that if you live up to a particular term, whatever amount you have agreed to collect, you collect it. But if you die earlier than the specified time, you can understand, then of course that same amount will still be paid. In such a circumstance, there is element of savings in that. If perchance there is in terms of premium omission, if you omit premium, you can automatically under the term assurance, you don't have cover. But under the endowment, you may be given some grace, and that grace is no more than 30 days. Once you don't pay after the 30 days, the cover ceases immediately. I hope I'm clear.
Mr. Peter.
Hello?
Mr. Peter.
I hope I'm clear.
You have not answered my question, no?
Your question,
Okay.
Hello,
I get is if you omit to pay your premium and there is a loss at a particular time, what happens? Abi?
That's the question.
About 15 years.
Eh? You are paid for, in fact, you are paid for 100 years. The lecturer has said every insurance is taken on yearly basis, an annual contract. It means at the end of 1 year, one contract has expired. If you take another year, it's another contract on its own, because the insurance company is at liberty to reappraise the risk again to determine whether they want to continue at the same premium or at an increased premium, or they want to decline the risk altogether. So if you don't pay at the commencement of another insurance contract year, then you have not provided cover for yourself or your employees or whatever.
Thank you very much, sir. I really appreciate it, sir. I like it. Mr. Peter, I hope that answers your question, sir.
So my 15 years payment has gone down the drain.
It's not about 15 years. It's about annually, just like he has answered your question, sir. Just like if within that 15 years, if when I was starting, I said it's an annual contract. If within that contract, there's any eventuality, definitely the policy will speak to it. So it's not about the duration, it's not about the length, but it's about the cover is being taken. It is an annual contract. Because you might say, okay, I've taken for 15 years, I want to have a break. Nobody has died in my organization. You now have a break. For the whole of 1 year, nobody might say, I've died. This just like if we did, as we are taking it every year, it's a probability. Insurance is a probability. It may not. So if in a year you have said, oh, I picked up the contract, it could be that there is a loss that may be lost that year, there may not be lost that year, fine. But the year that there is a loss, if you have picked the cover will be attended to. If there's no cover, you will not even come to insurance. See, if you don't have contract with the insurance company, will you come to insurance company that you want to pay? Because it is an annual contract. So if you don't have contract, aside insurance contract, in a normal business contract, if you don't have contract with people, do you go to them? So it's as simple as that. I hope I've been able to answer your question, sir. Mr. Peter, it's not about, oh, I've been paying money 15 years. Because just like I told us, you are using small money to get big cover. So in the course of that year, there might have been loss. So if there is loss, the cover, the policy will speak to the loss. So that is all about it. Do we have any other person? Our time is running out. Alaji, I really want to appreciate your contribution, sir. I really want to appreciate it. Thank you, sir.
My pleasure.
If I do not have anyone asking questions, I want to say thank you for having attended today's program. And let
me ask you a question.
Okay, sir.
What's the minimum number do you need to have before you can put together a group life insurance?
Just like the Pension Reform Act of 2004 says, with five employees, minimum of 5, at least once an organization have 5 employees, they are good to go to pick up the group life insurance.
Is it only when we work in organization that we can take up a policy called group life insurance?
No, I've said
I've
said it in the course of my presentation, sir, that group societies, clubs, they do group life too. Even churches, organizations do group life, even outside the normal company or organizations. That if you are as club members, they do, once they are in a group, they can, once a group is formed, they can pick up group life. I've said that in the course of my presentation. Thank you very much, sir. I really appreciate it.
So I want to advise you for people that have what do you call it, school, old student association.
Yes. Yes.
It keeps the bond
It's
together. If
applicable.
anybody dies, you just give money to them.
Thank you very
Thank you.
much, sir. I really appreciate it. We have to put this meeting, bring this meeting to a close because I'm receiving signals already. I want to say thank you for everyone that has attended this meeting. I look forward to seeing you again next week between 5:30 and 6 p.m. Thank you for always being there. Have a wonderful evening, everyone.
All right, madam. Thank you.
Thank you. Thank you, everyone.
Well done for the good job you're doing.
Oh, Madam Omotola Shotade, thanks for joining me on this call. Akin Pagbero, Motola Dayodidapo, Ige Mayawa, and every other one. People on Facebook, I want to say thank you for watching. So do have a wonderful evening. Thank you so much.